Fantastic. So I'm last and it's quite warm, so I hope everybody's still awake because I'm going to talk you through some of our research and how it applies to the field of money management. Before I do, so the Money and Mental Health Policy Institute, for anyone who doesn't know, or Money and Mental Health, for anyone for whom that's too much of a mouthful. We are a small research charity. We were set up in 2016 by Martin Lewis, who runs Money Saving Expert. And our job is to try and better understand and tackle the link between financial difficulty and mental health problems. And I'm going to talk you through why and how we think we can work together to do it. But before I do, and Gareth will know it wouldn't be me if I didn't go slightly off brief, I wanted to raise the stakes a little bit on the whole competition, because it's not just money management that mental health relates to. So first off, a quick quiz question for everybody. What proportion of people do you think will experience mental health problems? Loads of different answers. I think I heard some of the right answer in there. Normally somebody says 1 in 4, and I think I did hear that, which is the figure that's quite often thrown around in terms of mental health, and it is true. So 1 in 4 is the number of people in this room right now who have mental health problems, number of people in your family, number of people across the UK. It's actually half of us in our lifetime will experience mental health problems. So if you are designing a financial tool or a financial product, which quite often most of us use for a really long time, that's definitely going to be your aspiration if you're building something. Most of us use our current accounts for about 17 years. So you should be thinking more about this half number than the quarter. This is a big chunk of your user base. And actually most of the things that you're going to design that would work better, if you think about mental health problems, will work better for everyone. And then secondly, just to kind of hammer home why this is really important and why I think this whole challenge is a fantastic initiative and something that I think everybody here should be getting behind, is this graph here. And I'm going to add some labels onto it, and you can probably guess where this is going. So causes of death for males aged 15 to 34, you've got circulatory diseases, transport accidents, cancer, accidental poisoning and exposure. A lot of that is drug overdoses, it's just a technical name, and suicide. And actually that suicide figure becomes much bigger if you include on there, which it does in the sort of greyed out ones where it's not 100% clear. Genuinely, this is an opportunity to try and bring that number down. And it's not very often that in the field of fintech, you have an opportunity where you think, I might actually save a life today. So I'm going to talk through a bit about how you might go about doing some of that. So people with mental health problems are 3 times as likely to be in problem debt. That's why Money and Mental Health exists. That's why we were set up. Our job is to try and understand why and to tackle it. And half of British adults with a debt problem also have mental health problems. So if you are designing something that is intended to help people in problem debt, half of the people using it also have mental health problems. So if you design something without thinking about how someone's mental health affects how they use your tool, it's probably not going to be as effective as it could be. And that's half of people right now. So when you start to think over time, that's going to go up again. And this cycle is really important. So I'm going to spend a minute talking us through where we get to on this circle. What we tend to do at Money and Mental Health is lots of in-depth research, whether that is looking at national data sets, academic literature, or talking to our research community. So we have a group of 5,000 people who all have personal experience of mental health problems who feed into our research on a weekly basis. It's the UK's biggest mental health research panel, and it's an enormous amount of data. But what we try and do is distill all of that down into something simple and something that you can understand and navigate. So this looks very straightforward, but the amount of insight behind it is huge. And we have some reports on the table over in the marketplace. So if you want to drill down into any of these areas, we can show you all of the research that sits behind it. So this is the cycle between money and mental health problems. And it is a kind of vicious cycle, and you can enter it at multiple points. For the purposes of this diagram and how we're talking through it, I'm going to start at mental health problems. So let's assume that the person that you're aiming for your product to help develops a mental health problem. They could equally be entering this cycle at financial difficulty, and there's been a great job done earlier talking about the things that happen in people's lives that can cause that financial difficulty, that can put you into this cycle. So starting with mental health problems, we all understand that mental health problems affect the way we feel. that's kind of inherent to their nature. But actually, another thing that's inherent to mental health problems is they affect how we think. They affect how our minds work. They affect our financial capability. So on there, it talks about cognitive and psychological barriers to managing your money well, to accessing good financial products, and to staying out of debt. So for example, and just to take 2 examples, poor working memory. So mental health problems can affect your memory. It's a very common impact of depression, of obsessive compulsive disorder, a really wide range of mental health problems. And so can the medications that we take for our mental health. So if you're taking an antidepressant, it can make it harder to remember the PIN number for your bank. If you are struggling with depression, it can make it harder to remember the phone call that you had with the bank about repaying your debt and where you're up to on your repayment plan. A second example is lack of impulse control. So our impulse control goes down in periods of poor mental health. So it's harder to resist spending on those purchases that you know you don't really need. Whether that's, that we can all relate to, comfort spending when you've had a really rough week and you buy a takeaway on a Friday night because you just don't feel like cooking. But that escalates in periods of real poor mental health and can get people into real financial difficulty. And when you take a condition like bipolar, spending and manic spending is one of the criteria that they use when they diagnose bipolar because it's so common. And in those circumstances, you might be seeing people spending tens of thousands of pounds, taking on new lines of credit. It sounds like I'm making up exaggerated examples, but in our research community, every single week we hear from people who are in enormous amounts of debt because of manic spending. I recently heard from somebody who had bought a camper van, someone who started a business, someone who's bought a timeshare, somebody who had spent £80,000 on craft materials in a period of really intense poor mental health. And you can imagine the financial consequences for the rest of your life that can have. The second step on here is reduced financial capability. So, and some of that comes into the earlier one as well, but it's much harder to compare products, to know what's the right product to be using if you can't hold all the information in your mind. If you're working your way through a comparison site and you're trying to compare 2 insurance products and one of them's got a higher premium but the other one costs more each month, and it's hard enough to work out which one to choose when you're well, but when you're also struggling to retain information and your brain's in a bit of a fog, it becomes much harder still to work that out. And the same applies for sticking to a budget or making complex decisions. Your money management becomes harder in periods of poor mental health because the information is harder to hold in your brain, harder to understand, and it's harder to act on. And then you get to financial difficulty. And this cycle here is just focusing on financial management. The other side of this picture is what's happening to your income. And Joe did a great job talking about income smoothing, and actually also about the kind of life shocks. If you are suddenly experiencing a period of poor mental health, your income is likely to be going down at the same time as your spending might be going up through that lack of impulse control, and your ability to manage the difference between those 2 things has dramatically reduced. So it is no surprise that we then get to people 3 times as likely to be in financial difficulty. So we're now at the bottom of this spiral, which, as I mentioned at the beginning, could be your entry point. So not all mental health problems are caused by financial difficulty, but you might start off with financial difficulty that then leads to stress and worry. Being in debt feels really rubbish. It feels, it brings guilt, it brings stress, it brings anxiety, but it also leads to things like debt collection activity, which can also have a really big impact on our mental health, can lead to going without things that you need. And that psychological harm that is caused by the debt is caused by the things that you have to go without when you're in the debt, is caused by the way that the debt is collected, makes it harder to recover. So the research shows very clearly that you are 4 times as likely to still be suffering from depression 18 months on during a study period if you are also in financial difficulty. So you can increase someone's likelihood of recovery from depression over 18 months 4-fold by solving their problem debt, which is why we spend a lot of time talking to mental health services about why they should be linking up with people like Citizens Advice, Step Change, Money Advice Trust, and making sure those services get to people. But there are things that everyone here can do too in terms of providing tools and things that will help people to avoid that in the first place. So we did a big piece of work last year about fintech for mental health, and a lot of this is powered by open banking. So not all of these things are going to necessarily require open banking, but most of them will. So I'll focus on some of those ones. Number one, money management, which I know is the whole title of this, but here I've whittled it down just to, it's basically about budgeting. It's about, can you understand the information that's coming in, and can you make useful decisions about how to prioritize your expenditure? By using open banking to bring together lots of different sources of financial data and potentially other data, and presenting it to people in a way that's clear and simple and easy to understand, you help everyone, but you disproportionately help the people who are currently finding it hardest. So it's not about necessarily designing something that's just marketed at people with mental health problems. It's about designing something that's useful for everyone, but having in the back of your mind, how can I make sure that those people who have the greatest needs in accessing this can benefit from it, and those who will benefit the most. The second is around high control products and self-exclusion. So if your impulse control has gone down, how can we help you to stay in control? And that might be things like setting daily, weekly, monthly spending limits. It might be turning off particular merchant categories, codes of spending. So for example, we've recently worked with Monzo and Starling to bring in a gambling block in some of their tools so that you can turn off gambling spending. It could also be about self-exclusion from things like credit. So you might want to be able to turn off your access to your overdraft, or say that you can't take out new credit because you know that in a period of poor mental health, you're more likely to do that, and you don't want to have to suffer the consequences and the impact on your mental health later. Number three, and this is really hard, so if anyone cracks this nut, massive brownie points, is checking understanding online. So in a face-to-face lending environment, people who are making the decision about whether or not you can borrow money have some cues if someone is really struggling. And it's still really hard. You can't make a mental capacity assessment over a counter in a bank. And the rules say that you should assume that someone has capacity unless you've got reason to suspect otherwise. But in a face-to-face engagement, your reason to suspect might be that somebody is acting in a way that's really unusual. They might be totally inappropriately dressed for the weather. They might be clearly hearing voices. But in an online engagement, what are your cues that somebody might not have the capacity to make a borrowing decision? And we have other senses in terms of the data that we're gathering. We just need to learn how to read them to be able to pick up on those cues. And at the moment, we can't really do that. So anyone who can crack that one, I'd be delighted. Number four is around support from friends and family. So at the moment, tools and processes for third parties to help with financial management aren't particularly sophisticated. So there's power of attorney. It's a bit of a sledgehammer to crack a nut for some people. If you are a working age adult, so 3/4 of people are diagnosed with lifelong mental health problems. 3/4 of people who are diagnosed with lifelong mental health problems are diagnosed by the time they're 25. If you're 25 and you're diagnosed with bipolar disorder, do you want to take out a power of attorney and hand over what feels like responsibility for your financial management to your mum? Probably not. And actually, that might not be what you need. You might need to give a friend or family member read-only access to your account so that they can help and guide you without having permission to spend your money. Or you might want someone else who can approve big transactions or can approve nighttime transactions, or somebody else who can receive balance alerts but not spend beyond a certain limit on your account. So that's really important, and open banking has the potential to bring together lots of different data sets so that they don't need to have permission to access each one of your accounts individually and jump through every single hurdle that's currently set up, but actually you could set up something that will bring together just the financial data that someone wants to share, and share it just with the person that they trust and that they're currently allowing to help them to stay out of debt. So there's huge potential there. And the final one is spotting the problem and offering help. So this could be about you empowering someone else to spot the problem themselves. So again, taking bipolar as an example, if your mental health fluctuates from manic episodes to periods of depression, it can actually be quite hard to spot when you're moving between one and the other. But the numbers that change in your bank account are pretty hard data. And if you can see that you spent twice as much this week as you did last week, that can be a really helpful reminder to you personally that actually you might want to seek some help at the moment. You might want to consider reviewing your medication. You might want to reach out to someone that helps care for you. Or it could be about you enabling the bigger banks or enabling other organisations to be able to spot changes in someone's spending behaviour and to understand how they could appropriately use that to offer support and help. If somebody suddenly starts spending in the middle of the night, and that's not normally what they do, you could reasonably assume that something's changed in their life, and working out how it would be appropriate to respond to that is a really big challenge. But we've cracked it for fraud, so there's no reason why we can't crack it for other kinds of changes in people's behaviour. And then finally, this doesn't come without its risks, and we are a mental health charity and everything we do is rooted in the lived experiences of people with mental health problems. So it wouldn't be fair for me to set you a challenge of something to go and solve without trying to set some tramlines around how you can do that without causing any harm. So number one is that everything that happens in terms of creating tech for mental health and for people with mental health problems has to be personalised. You can't say that just because somebody has bipolar, they can't control their spending. You couldn't say that just because someone has OCD, they can't remember their passwords. But what you could do is offer a functionality to people to help them remember their passwords that might be useful for someone with OCD. It might also be useful for someone without OCD, and it's up to them to choose whether they want it. The second is that it can't be discriminatory. So if you are developing something that is intended to help somebody with mental health problems, you should not use that to limit their access to other kinds of products and services. That's why we talk about self-exclusion from credit, not you spotting that someone has a mental health problem and then saying, therefore, you shouldn't have access to this part of our product or service. The third is that it must be empowering. And Michelle did a great job of talking about this. This is supposed to be about helping people to live healthier, happier lives and to have security around their money. And it feels good to do it yourself, particularly if you're living with a mental health problem. People can spend a lot of their lives trying to remain independent, to stay in work, to keep your own home. And your finances should be another area where we can provide more tools and resources to help people to stay in control. And the fourth is wherever possible, these should be co-produced by the people that you are aiming to help. And that's a generally accepted principle in pretty much all tech, is that you work with your users to design your products to make sure that they work well. And if a group of your users, probably half of them, if you're aiming at people in financial difficulty, have mental health problems, you've got to make sure that they are represented in your user testing, and you've got to make sure that their experiences are understood and that you listen to them when they're talking about the language that they want you to use, the tools that they want to have access to. And if anyone does want to do that through this challenge, do come and talk to us, because our research community is a really rich resource of insight, both that we've already gathered, but also that we can make more available. I'm going to wrap up there, but thank you very much, and I really hope that everyone is going to apply and think about mental health when you do it. Thanks.